every Tuesday, we also have our man Tim Ord on. If you go over to ord-oracle.com, you can check out what he's all about. You have the homepage here, you have newsletter and the book. Additionally, if you go over to the services tab, we have 2 fantastic webinars from him. That is a Secret Science of Market Tops. I would say this is definitely very important right now because everyone seems to be trying to call a top in the market. And then additionally, 6 secret ratios every trader should know. So strongly recommend checking those out. Tim, how are you doing?
Good. How you doing, too?
Doing
glad to be back.
Yeah, we're happy to have you back, Tim. Man, it's like every time, we see you last, something crazy happens in the market, right? I mean, well, we were on Thursday, and now we had tariff fear on Monday, and it seems we've kind of recovered. So, I'm just curious to see what you're looking at today. I know we usually talk gold and the market in general.
Right. Let's take a look at chart 1.
Sure.
And actually, this chart goes back to late 2018. And the top window is McClellan Oscillator. We actually covered this before in the past. And there's kind of 2 signals to this. It needs to get down below minus 300 to show capitulation. And it did that on December 20th, 2024. So obviously a little over a month ago. Then you need a rally. There's 2 different actually upside targets for major bottoms. It needs to go to minus 300 to plus 300 in a month. For minor bottoms, which I think this is, it needs to go to minus 300 to plus 200. And we did that on August or January 21st of 2025. So it's a month and 1 day, close enough. But we did have that. So the market is in a relatively good position. I like to actually see it go to 300, really confirm it, but 200 is probably good enough. I'll say probably, not 100%. It kind of lowers the odds, but we're still probably hitting 80%. So if it got to plus 300, it'd have been probably in the 90s, maybe 95, or really a high percentage. But we're still in a good position. So that's on the bigger term. So that says kind of an intermediate term trend is up, but not extremely strong, but still up. Let's go to chart 2.
Yep.
This we covered before. This is WAG breast thrust indicator, and we actually got a trigger. It went from has to go below the definition, which is the bottom window, is advancing issues over total issues with a 10-day average, and needs to go from 0.4 to 0.6 in 10 days or less. Well, it went from 0.4 to 0.4 to 0.6 in 10 days. This went from 0.41 to 0.61 in 6 days. So in general, that was triggered, and it is said that the Zwag breast thrust indicator only shows up in bull markets.
Okay.
So that did show up. So it adds to the bullish situation. Now let's go to a little bit shorter term here. Let's go to chart 3.
Yeah.
And this is kind of my bread and butter type things. You got to have capitulations. Right after capitulations, you got to have a sign of strength. And so Joe Granville, which is technicians back in my era, the 70s and 80s and part of the 90s, he always talked about the wall of worry. And that's how markets rally. They kind of go up on fear. If they go up on optimism, you're looking at a top. But if they go up on fear, usually that fear keeps the rally going. And I really can never define what fear meant. Well, I did come up with the trend readings of 1.2 or higher, shows there's fear in the market. And so I have a 3-day, a 2-day, and actually the top one is a 10-day. Anything above 1.2 on a daily basis shows fear. So if you get 3 days, that's better than 1 day. If you get 2 days, that's less than 3-day fear. But the ideal number is 10 days. That's 2 weeks of fear in the market. If you get that up around 1.2, normally you got a trend going. And trend could be multi-weeks, maybe multi-months. Could be a long time. We don't have that here, but we do have the 3-day and 2-day trend, both well above 1.2. The 1 day is kind of irrelevant. Yesterday was 103, but the day before I think was 1.3. So, but anyhow, the 2 and 3 days are in bullish situations, I guess you might say. So there's chance that the current rally, we got enough fear in it maybe push it up at least against the previous highs, and maybe a little bit more. But we don't have the 10-day in an ideal situation here, so I'll hold.
I see. Yeah, please, Tim, stay right there. Folks, we'll be right back with Tim right after this. Welcome back, everybody. This is Jacob Shoup. I'm joined right now by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. Tim, before we go on, I just saw over the break that the Chicago Board Options Exchange is now going to be open 24 hours. So we might have to do a late night TFNN show at some point. Also, wow. Yeah, I know, right? I think the NYSE is extending 22 is going to file permission for that. So we'll never be able to sleep. How does that sound?
I'm not sure. I was looking forward to that. So
yeah. Before you went to the break, you were saying that
weird stuff can happen in the middle of the night.
I know. It'll be very strange to see how that works.
Yeah.
As far as the charts are concerned, you said something that the 10-day wasn't shaking out exactly to be bullish. Is that correct?
Right. Yeah. 10-day. We're on chart 3. The top windows of the 10-day, and we're coming in 107. You know, and I marked the times when the 10-day. Is 1.2 or higher, and they all came, near lows or during rallies and stuff. And we got 107 right now as of yesterday's close. And, sometimes these trends go up as the market rallies, which is really a bullish combination. That's what we had back, if you look back in, looks like about January of 2024, we had something like that. And that bodes well for the intermediate term. And this month is actually January and parts of February are really important for the year. If both of January and February are kind of just flat, a lot of times, they always say whatever January goes, so goes the year. And there's some truth to that. There's a lot of statistics to that. Mm-hmm. And this bullish period where the market should rally from basically January 20 or January 1st all the way into the first week of February, which we're in right now, should have the market up around 3%, and we're not quite there yet.
Okay.
And if we don't, that usually can flip the market sideways. So my opinion, this week is really important for the week to rally. If it doesn't, then it doesn't really spell trouble for the market, but it does take out quite a bit of the certainty that the market will be in an uptrend. I'll put it that way.
I see.
But getting back to this 10-day trend, it's not ideal. It needs to be up around 1.2. So I'm kind of worried about intermediate term rally starting from here, unless I see that trend up around 1.2. So there's some caution. So let's flip to
understood.
Chart 4. See where we are right now, and there's some good things here. The shaded area in blue I have on that chart there is, I have a lot of different numbers there. I have trend and a lot of different numbers. And we got a bunch of trend readings all in the 1.2 area and higher. And that's actually bullish. And that's what I thought would happen, kind of building and pushing the trend up higher. It needs to get to 1.2, 1.07. It's not too bad, but ideally, the more panic you have, the more stronger the rally thereafter. And so we do have a big support area. All those trend readings, the reason why I put that in blue is that's where the panic happened. In other words, trend readings of 1.2 or higher, and that's a support area. And that's kind of a wide support area. Basically goes from 582 to around 600. And we may go down and visit this area again, but that's where the bottom of the market for this year is, in this vicinity. So how much higher can we go from here is the key thing. And that's why I'm seeing how high this rally can go that we're currently having.
Yeah.
I want this week to be up week just because it's a strong seasonality week. If we don't have a strong up week, I'm going to pull back some of my bullish horns. But this is Tuesday, and the market's up today. If you look at the current volume on today's rally, it's pretty weak. And that's not ideal. And you had the last 2 days, not counting today, but yesterday and day before, you really had some decent volume to the downside. And volume goes in the direction of the trend. So you got some things wrong with it. And I don't know, the market just needs a bigger base forming here, which is a possibility, and build power for the next rally. In other words, go up, can't get going, come back down into this vicinity. And where the trend pops up again, into 1.2 area and higher and build energy for the next rally up. That could happen. So I'm not for sure, but I'm long right now, staying long because I don't see a huge reason to get out. If you look at the VIX, which is bottom window, it's actually down today with the market being up. That's usually a good sign. If the S&Ps was up today and the VIX were up, I'd probably be out on the close today on the market. So not extremely bullish here. I am long. I don't see a big reason yet to get out. I think we'll get back to be last Friday's high at a minimum, which is up about probably another % or so. And how that high is tested is going to be important to me. So kind of playing it safe. We had kind of two really big years in a row, last year and the year before.
Yes.
Up 25% or better both years. So we're kind of due for a rest here. So I'm kind of being careful. But anyhow, I'm long right now. We got time to hit the gold market.
Oh, yeah. And if you want to stay into the last segment as well, let's do it, because I know there's been a lot of moves in at least the spot price recently.
Yeah. Okay. Chart 5. I keep showing this chart because the bigger trends rule the smaller trends, and this is the monthly trend. It gave a buy signal back in May of 2024. Still on a buy signal. A buy signal is when the cumulative advanced decline and up-down volume close above the mid-Bollinger Band, which I pointed out on this chart. As long as they stay above the mid-Bollinger Band, trends up. We had a consolidation back into a recent low in early January, and since then both those indicators have turned up, which is bullish. So the longer-term trend is up. And chart, here's a chart 6. This is kind of an important chart. It kind of dictates the intermediate term trend. It's like the 18-day average up-down volume bands decline indicator staying above 0. This indicator is the 50-day average of the up-down volume, and I just use the bottom window, which is the up-down volume. The advanced decline doesn't seem to work as well. But as long as this indicator is above 1, or above 0, is -1 right now, it's the intermediate term uptrend. It doesn't take out all the wiggles of the market, but get you in the main trend. And once this gets above 0, which actually it is right now, even though when I made this chart, it wasn't. But once it gets above 0, it usually stays there and really picks out the multi-month trends instead of the multi-week trends that other indicators have. And that's promising. So I think this year is going to be a pretty good year for gold issues. And this chart kind of reconfirms that. So this chart is turning bullish right now, and it's pretty trendy. So I marked the times in the past when this indicator was above 0 with the green areas on the chart. So if you can see, if you look back in 2019, it stayed above 0 for 16 months.
Right.
So this is probably, and I've been saying for quite a long time, or not a long time, but I'm thinking what the current rally is a multi-month, if not longer rally. So the next intermediate term rally, I think, is actually starting now, and I think it could possibly last into July and still be in a bull market, but bigger consolidation. I'll hold for the last chart.
Yeah, please do, Tim. Folks, we'll be right back with Tim Ord right after this. Welcome back, everybody. This is Jacob Shoup. We are joined by Tim Ord of the Ord Oracle. You can visit his website at ord-oracle.com. We have a short segment here, Tim. Before we went to the break, we're looking at chart 6 on gold, and I think we have chart 7 up right now.
All right. Well, actually, let's go to chart 6 real quick.
Sure.
All right. This is a 50-day average of the up-down volume, GDX up-down volume, which is the bottom window. Okay. So that's a 50-day average. Now we can go to 7. And the bottom window on this chart is the 18-day average. So there's different averages here. So this is a shorter-term average. And this shows the short-term pattern. So on the 50-day average, you're looking at a bigger pattern that'd be a multi-month type rallies, which I think is developing here. And what this chart on chart number 7 is the short-term view of what's going on in the market, which is actually bullish. If you notice, both those bottom two indicators are hitting higher highs above the previous highs as the GDX is making higher highs. So there's no divergence here at all. So everything's still a go, I guess you might say, even on a short-term basis. And I'm thinking this is going to keep going up for a while. The reason why is on chart 6, the previous chart, the 50-day average is right smack at the zero line. To get that above the zero line, stay above the zero line, you need the chart number 7 here to continue higher. If you get what I mean, you need more time to the upside to turn that 50-day up.
Yep.
So I'm thinking that's probably what's going to happen. So this rally that started in January here, it looks like early January, is probably going to go on for a while. Probably at least at a minimum, you're going to break above the previous highs up around 44 there and probably keep going. So I'm thinking this, not every day is going to be an up day. It's going to be more trending, but trends up short term and probably intermediate term.
Fantastic. We love to hear it, Tim. Tim, thank you so much for joining us. We'll see you Thursday.
All right. See you then. Thank you.